Hello and welcome to CryptoCore, your navigator in the world of cryptocurrency. It's Friday, November 28th, 2025, and we're analyzing the market as of 12:01 a.m. UTC. We're going to get started right away.
And we have a lot to cover. The main story today is a real battle of narratives.
It really is. On one hand, you have Bitcoin fighting to get a solid footing back over that $90,000 mark, specifically around $91,285.
But the context is everything. The liquidity is just paper thin. It's the U.S. Thanksgiving holiday, and trading volume is down almost 50% compared to just last week.
A ghost town, relatively speaking.
Yeah.
Meanwhile, Ethereum is looking strong, defending that key $3,000 psychological level.
Right, and it's got this tailwind from the upcoming Fusaka upgrade. We're also seeing confirmed institutional money flowing into ETH, which is a very positive sign.
Yet, despite all this, the overall market sentiment is still stuck in extreme fear. The market cap's holding above $3 trillion, $3.11 trillion to be exact, but the fear is palpable.
And a couple of major news items are really stirring the pot. First, Upbit suffered a pretty significant Solana hack.
$54 million worth? That's not small change.
Not at all. And on the institutional side, Nasdaq is looking to quadruple the options limit for BlackRock's Bitcoin ETF, IBIT. A massive development.
Okay, a lot to unpack there. Before we dive deep, if you're finding our analysis helpful, please take a moment to hit that like button. It really helps us out.
It does.
So here's the plan for today. We'll start with the overall market indicators, then we'll do a deep dive into Bitcoin and Ethereum specifically. After that, we'll break down the latest international news, look at the technicals, and then lay out some key trading points to watch.
And finally, we'll wrap up with the broader market outlook. There's some really crucial context towards the end, so definitely stick around.
All right, let's get into it. The big picture first.
So starting with the total crypto market cap, as you said, it's sitting at $3.11 trillion.
Which is up just a fraction. 0.32% from yesterday, so almost flat.
Almost flat on the day, but that's not the interesting part. The key is that we're holding that $3 trillion line pretty firmly. It seems to have become a new solid floor for now.
And if you zoom out just a little bit, say to 7 days ago, November 21st, what does that look like?
That's where you see the real move. A week ago, the market cap was down at $2.97 trillion. So we're up about 4.7% since then.
Okay, so that suggests we might have found a short-term bottom and are now in a recovery phase.
I think so, yes.
Yeah.
But, and this is a big but, if you look back a month to October 28th, we were at $3.85 trillion.
Wow. So we're still down over 19% from that point.
Exactly. So while the short-term recovery is great, we have to remember we're still climbing out of a pretty deep hole. The context of that recent sharp correction is vital.
Absolutely. Now let's talk about the thing that's making everyone nervous. The volume.
Yeah, the 24-hour trading volume. Today, it's at about $118 billion.
Which, compared to yesterday's $139 billion, is a drop of over 15%. That's significant for a single day.
It's a huge drop. This is the Thanksgiving effect in full force. The U.S. markets are quiet, institutional desks are thinly staffed, and it just sucks the liquidity out of the market.
And compared to a week ago.
It's even more stark. Last Friday, we saw $208 billion in volume, so we're nearly at half of that now.
So what does that practically mean for someone watching the charts?
It means extreme caution is needed. In a thin market like this, even a moderately sized order can cause a huge price swing, up or down. Volatility is the name of the game right now.
A market on a knife's edge. Got it. How is this affecting the balance between Bitcoin and the rest of the market? Let's look at dominance.
Sure. So looking at the TradingView data, Bitcoin's dominance is at 59.25%.
Which is up about 0.3% from yesterday.
Right, and the CoinMarketCap data shows the exact same trend, up 0.3% to 58.60. It's a small move, but it tells a consistent story.
In times of uncertainty, capital flows back into Bitcoin, the king.
It's a flight to perceived safety within the crypto space. And you see the other side of that coin with Ethereum's dominance, which actually dipped slightly, down 0.1% to 11.70.
Interesting. So even with ETH's strong narrative, the broader uncertainty is pushing people more towards BTC for now.
For the moment, yes. It's a classic risk-off move within the asset class.
Okay, let's broaden out to the altcoin market. What are the indices telling us?
The CMC20, which tracks the top altcoins, is up slightly, about 0.44%. So it's basically moving in line with the broader market.
But the sentiment is what really stands out to me.
The fear and greed index, it's sitting at 18 today.
18.
Yeah.
That's still deep in extreme fear territory. It's up 3 points from yesterday's 15, but that's barely a flicker of optimism.
It really is. It shows just how much psychological damage was done during that drop over the last month. The price may be recovering, but the confidence, the retail confidence especially, hasn't returned yet. The trauma is still fresh.
And that's reflected in the altcoin season index, right?
Absolutely. That index has plummeted. It's at 19 today, which is down a sharp 6 points from 25 just yesterday.
So any talk of an alt season is completely off the table for now.
Completely. This confirms that altcoins are losing momentum and underperforming relative to Bitcoin. All the energy is focused on BTC's recovery.
What about the overall market's momentum from a more technical standpoint?
The average crypto RSI, or relative strength index, gives us a good read on that. It's at 55.3 today.
Down from 56.8 yesterday.
Yeah, a drop of about 1.5 points. It's not a huge move, but it indicates that the recent upward push is showing some signs of fatigue. The momentum is slowing down a bit.
Okay, makes sense. Let's shift gears to the derivatives market. This is where a lot of the professional traders live. What's happening with open interest?
Open interest, or OI, is down across the board. For unperpetual futures, we saw a drop of about 41 billion.
And for standard futures?
A smaller drop, but still a drop, about 0.84 billion.
So what's the interpretation here? Are people just closing their positions?
It's a combination of two things. First, some of this is likely short positions being closed out or liquidated as the price went up. But second, and probably more significantly, it's traders reducing their overall exposure ahead of the long holiday weekend. Nobody wants to hold a large, leveraged position in a thin, unpredictable market.
Taking risk off the table.
Smart. And the funding rate.
The funding rate is barely positive. It's at 0.0002%.
Up a tiny bit from 0.001% yesterday.
Exactly. It suggests there's a very slight bias towards long positions, meaning more people are betting on the price going up than down. But honestly, at this level, it's essentially neutral. There's no strong conviction either way.
So the derivatives market is basically in a holding pattern, just like the spot market.
Pretty much. And finally, on volatility, the Volmex index for Bitcoin is at 51.39, and for ETH, it's higher at 74.78.
And both of those are down from yesterday. Yes, which seems counterintuitive. But it just means that in the last 24 hours, the realized volatility was low as the price traded in a narrow range. The warning, however, remains. Implied or potential volatility is high because of the thin liquidity. Things could change very, very quickly.
Okay, that's a fantastic overview of the market's health. Just a quick reminder for everyone listening. If you find our pace a bit too fast or too slow, you can adjust the playback speed in your video settings.
All right, shall we zoom in on Bitcoin?
Let's do it.
Mm-hmm.
So Bitcoin's price today is $91,285.
That's up 0.86% from yesterday. It's a modest gain, but the key is that it's another day spent trying to solidify that $90,000 level as support.
What was the range like over the past 24 hours?
It was actually quite tight. The low was around 90,193. And the high was 91,836.
Volatility of just 1.82%. So it's really been building a narrow consolidation range right above that 90K mark.
Precisely. It's coiling, building energy for its next move.
Let's break down the performance over different time frames, because this is where the story gets really interesting. The daily gain is small, as you said.
But when we look back 7 days to last Friday, the price was $86,529.
So that's a 5.5% increase for the week. That's a very meaningful bounce from the lows. It secured a positive weekly close, which is a big technical win.
It is. It shows buying pressure came in right where it needed to. However, we have to keep that 1-month view in mind for perspective.
Right. A month ago, on October 28th, Bitcoin was trading at $114,057.
So even after this week's strong bounce, we're still down 19.15% from a month ago. We haven't come close to reversing that larger downtrend yet.
So a positive short-term picture within a still correcting medium-term picture.
That's the perfect way to put it.
Now, what about the volume for Bitcoin specifically?
The 24-hour volume for Bitcoin was $57.04 billion, and that's down over 14% from the previous day.
Okay, now this is interesting. The price went up, but the volume went down. What does that typically signal?
It's actually a cautiously optimistic signal. It suggests that the selling pressure has simply exhausted itself for the time being. There aren't many active sellers at these levels, so it doesn't take a lot of buying volume to push the price up.
The path of least resistance is currently upwards, or at least in this low volume environment.
Exactly. And the circulating supply, for the record, is steady at 19.95 million BTC. No change there.
Let's bring in some of the corporate and on-chain news, because there was a big one. SpaceX.
Yes, this caught a lot of attention. SpaceX was observed moving 11,163 Bitcoin.
That's about $105 million at current prices.
Right, and they moved it to a wallet associated with Coinbase Prime,
which is an institutional custody service. So what's the read-through here? Are they preparing to sell?
All signs point to no. This looks like a standard custody reshuffle, not a move to an exchange for selling. If anything, moving assets to a prime custodian like Coinbase Prime reinforces their long-term holding strategy. It's a sign of institutional-grade treasury management.
So it's actually a bullish data point confirming their conviction.
I would interpret it that way, yes. It confirms they see Bitcoin as a long-term treasury asset.
And what else is the on-chain data telling us?
It's showing that we're still digesting some of the profit-taking from long-term holders who sold during the recent run-up and subsequent drop. The market is absorbing that supply. But critically, the on-chain order books show that the wall of spot buy orders above $84,000 is quite thin.
So if we were to lose the current support levels, there's not a lot stopping a faster drop to that lower range.
That is the risk, yes. The support is not as thick as we'd like to see it.
Okay, so a lot of great detail there. And just a quick note for our viewers, if you're enjoying this level of analysis, you can support our work by hitting the heart-shaped thanks button below the video. Even a small contribution, like the price of a coffee, goes a long way in helping us gather and analyze this data.
We really do appreciate it.
One last metric for Bitcoin, the long-term rate of return.
Year to date, Bitcoin's annual return is actually still negative at minus 2.22%.
It's easy to forget that. Despite the huge run-up, we are still technically down from where we started the year.
We are, but it also shows how much ground we've recovered from the lows. We've managed to claw back a huge portion of that earlier deficit.
A great reminder to always keep the bigger picture in mind. All right, let's pivot to Ethereum.
Ethereum, it's currently trading at $3,015.
So just barely holding that $3,000 mark. And it's actually down slightly on the day, about 0.43%.
A very slight dip. It's basically in a defensive posture, fighting to hold that key psychological level. The 24-hour range was a bit wider than Bitcoin's, from a low of 2,988 to a high of 3,067.
A volatility of 2.64%. So a little more action there.
A bit more. The battle for $3,000 is very real.
How does its performance stack up against Bitcoin's over the last week and month?
This is where ETH has been outperforming. Over the last 7 days, since November 21st, ETH is up 6.5%.
So a full percentage point higher than Bitcoin's bounce.
Correct. It showed more resilience and a stronger snapback from the lows. The market clearly sees strength in its current narrative.
But the flip side is that it fell harder, right? What's the monthly comparison?
That's right. A month ago, ETH was at $4,115. So it's still down over 24% from that level.
So a deeper correction than Bitcoin's 19%, but a stronger short-term bounce.
Exactly. Higher beta, both on the way down and on the way back up.
Let's talk about Ethereum's volume.
Its 24-hour volume was just under $17 billion. That's a 20.82% drop from the day before.
A bigger drop than Bitcoin's. So, with declining volume, ETH is showing a bit of weakness relative to BTC today.
It is. It couldn't hold its gains as well as Bitcoin did in this thin environment. Circulating supply is steady at 120.69 million ETH.
But the real story for Ethereum right now is the fundamental and institutional drivers. Let's start with the ETFs.
This is huge. Over the last 2 days, the new Ethereum spot ETFs have seen a net inflow of $175 million.
$175 million in just 2 days.
Yes, this is clear, hard evidence of institutional buyers stepping in to accumulate ETH at what they perceive to be discounted prices. It's a massive vote of confidence.
And this is all happening ahead of a major network upgrade.
The Fusaka upgrade, scheduled for December 3rd. And in preparation for that, the network has just implemented a significant change.
The gas limit.
The gas limit has been raised to 60 million. This is the first time it's been increased in 4 years. And it's a huge deal for network capacity and scalability. It effectively increases the number of transactions the network can handle.
So you have institutional money flowing in and a fundamental network improvement right around the corner. That's a powerful combination.
A very powerful narrative. And it ties directly into valuation. We saw an analysis from the CEO of Hashed, a major crypto fund.
What was his take?
He argued that based on its fundamental value, things like network fees, user activity, and staked value Ethereum is currently undervalued by about 58%.
58%. That's a bold claim.
It is, but it adds fuel to the fire for long-term investors. It makes a strong case that beyond the daily price action, the underlying asset has significant room to grow.
Okay, one final metric for ETH. The year-to-date return.
It's also in the negative, even more so than Bitcoin. ETH is down 9.48% for the year.
Again, crucial perspective. Despite the recent strength, it has more ground to make up to get back into positive territory for 2025.
That's right.
This is a perfect segue into our next section. These individual asset stories are being heavily influenced by the broader news cycle. We've compiled and analyzed reports from various media outlets over the last 24 hours. Let's walk through them.
Sounds good. Let's start with the macroeconomic picture, which is always the backdrop for crypto.
A report from CryptoSlate highlighted that the market's expectation for a U.S. Federal Reserve rate cut in December has surged to 85%.
85%. That's practically a certainty priced in. And this is coupled with expectations that the Treasury will need to provide more liquidity to the system.
And lower interest rates plus more liquidity is
rocket fuel for risk assets like cryptocurrencies. It's a very bullish macro setup developing for the end of the year.
Okay, sticking with big picture news, but focused on Korea. CoinSpeaker reported a massive partnership.
Yes, between Dunamu, the operator of the Upbit exchange, and Naver, the internet giant. They're teaming up on a 10 trillion won initiative for AI and Web3.
That's a huge commitment from two major players, signaling deep corporate interest in the space.
Absolutely. Now let's look at some specific Bitcoin price predictions that have been making news.
Cointelegraph noted that Tom Lee, who is usually very bullish, has cooled on his call for a $250,000 Bitcoin this year.
Yeah, he's dialing back the short-term optimism, but in the other corner, you have Cathie Wood of ARK Invest.
Still as bullish as ever.
Unwavering. She is reiterating her call for a $1.5 million Bitcoin by the year 2030. So a split between short-term caution and extreme long-term bullishness.
A perfect reflection of the market's current mood. Okay, we've already touched on the Ethereum news, but let's formalize it.
Crypto.news and NewsBTC both covered the Fusaka upgrade on December 3rd, and the gas limit increased to 60 million.
And they also reported on that hashed CEO's analysis that ETH is 58% undervalued. So that narrative's getting wide coverage.
It is. It's a key talking point for ETH right now.
Let's move on to the ETF and options news, because this is where the big institutional plays are happening.
Cointelegraph and AMB Crypto had major reports on this. First, Nasdaq is formally pushing to supersize the option limits for BlackRock's IBIT Bitcoin ETF.
What does that mean in practical terms?
They want to raise the limit on the number of contracts that can be held to 1 million. It's a massive increase, 4 times the current limit. It signals that they expect institutional demand for Bitcoin derivatives to be absolutely enormous, on par with a major tech stock.
Wow. And we also have the ETH ETF inflow data.
Yes, the reports confirmed that $175 million flowed into the ETH spot ETFs in just the last 2 days. Hard data showing institutional buying.
Okay, what's happening on the global regulatory front?
It's looking more and more positive. Cointelegraph reported that Australia is pushing ahead with a licensing bill for crypto exchanges.
More regulatory clarity, which is always good for the industry.
And in a surprising move, AMB Crypto noted that Russia's central bank will now allow mutual funds to have some limited investment in cryptocurrency.
That's a significant policy shift from a major economy.
A very big deal.
Now for the less positive news. Let's talk about what's happening in Korea.
Crypto Briefing broke the story that Upbit, the largest exchange, disclosed a hack of its Solana hot wallet.
$37 million was stolen.
That's the figure. However, Upbit immediately came out and promised to cover all losses for its users from the company's own funds.
So no users will lose money. That's a crucial point for maintaining trust.
It is, but it's still a security black eye. Separately, there were reports that Korean banks are on high alert for ransomware attacks linked to Russia and North Korea.
A reminder of the constant security threats in the digital asset space.
Indeed. Now for some interesting global market developments.
Crypto Daily reported that Kyrgyzstan is launching a $50 million stablecoin backed by gold.
An interesting experiment in bridging old world assets with new world technology.
And 99 Bitcoins had a fascinating story about the nation of Bhutan.
Yes, the country is reportedly putting some of its funds into Ethereum staking, a sovereign nation participating in DeFi.
Incredible. On the other side of the regulatory coin, Thailand has ordered WorldCoin to halt its operations in the country.
A bit of a setback for that specific project.
Now let's talk about stablecoins, which are the bedrock of the crypto economy. There was some drama here.
Yes. The Defiant reported that the ratings agency S&P downgraded Tether's USDT credit rating to weak.
Ouch. How did Tether respond?
Their CEO came out swinging, calling S&P a propaganda machine and vehemently disagreeing with the assessment.
The battle between legacy finance and crypto continues. Meanwhile, a positive development for Ripple.
Cointelegraph reports that Ripple's new stablecoin, RLUSD, has been approved for institutional use in Abu Dhabi.
A big win for them and a key financial hub.
A very strategic win.
Okay, what about news from major corporations?
Crypto.news reported that JP Morgan is launching a structured note product linked to Bitcoin's performance.
So JP Morgan, whose CEO famously dislikes Bitcoin, is now selling Bitcoin-linked products.
The demand is just too high to ignore. It's a direct challenge to the kind of products that MicroStrategy has been offering. They want a piece of that market.
And we've already discussed the other big corporate story.
The SpaceX move, yes. Transferring 11,163 Bitcoin to their Coinbase Prime wallet, signaling a long-term hold.
Finally, let's touch on the news related to U.S. politics.
This was an odd detail from the Upbit hack. Crypto Briefing noted that some of the stolen assets included meme coins related to President Trump.
Just a strange footnote to the story.
A very 2025 detail. More substantively, NewsBTC reported that the market is showing some positive reaction to the idea of Kevin Hassett being a potential candidate for Fed chairman.
He is seen as being more pro-crypto, or at least more open-minded than some other candidates.
Correct. So the market is starting to price in a potentially more favorable regulatory environment in the U.S.
Okay, that was a comprehensive run-through of the news. Let's distill all of this down into a purely technical perspective.
Let's do it. For Bitcoin, the technical picture is one of bullish consolidation. It's forming what looks like a classic bullish flag pattern above that $90,000 mark.
And what are the indicators saying?
The 14-day RSI is hovering around 60. It's not overbought, but it's in strong territory. It suggests it's just building up energy. The key moving averages, the 20, 50, and 200-day EMAs, are all in a positive alignment, a golden cross setup.
And what's the key support level to watch right now?
The 20-day exponential moving average, which is sitting right between $88,000 and $89,000. That is the first major line of defense if 90K fails.
Okay, what about Ethereum's technicals?
ETH is in more of a direct battle. The fight is centered squarely on that $3,000 level. Its RSI is a bit lower than Bitcoin's, in the mid-50s.
So it's more neutral, but still with a bullish bias. It has more room to run before it gets overbought.
Exactly. The big challenge for ETH is the 200-day long-term moving average. That's acting as major resistance right at the $3,150 level.
So that's the ceiling it needs to break through.
That's the big one. A decisive move above $3,150 would be a very strong bullish signal. On the downside, the key support is the 0.382 Fibonacci retracement level, which comes in around $2,900.
Okay, crystal clear. Now, let's turn this into actionable insights. What are the top 3 trading points for people to watch right now?
Point number one is the most immediate. The battle for $90,000 for Bitcoin versus this dangerously thin liquidity.
The holiday effect.
Exactly. You have to watch whether that 90K level holds during this quiet period. If it breaks, the move down could be very sharp and very fast because of the lack of buyers. A drop to 88K or even 85K could happen in a flash.
Okay, so that's the key defensive level to watch. What's the key offensive level?
That would be my second point. Ethereum's attempt to break $3,100. This is all about momentum.
Does the ETF inflow continue?
That's the question. If we see more institutional buying and the hype around the Fusaka upgrade continues to build, a break above 3,100 could send a very positive signal to the entire altcoin market. Keep an eye on whale accumulation around that level.
Okay, and the third point, a potential risk.
Yes, the third point is a risk management one. The fallout from the Upbit hack. We have to be aware of that $37 million worth of stolen crypto.
The hackers could start dumping it on the market.
Precisely. That creates potential sell pressure. We need to watch the on-chain movements of that stolen money, especially for Solana and any Solana-based meme coins like BONK that were part of the hack. An unexpected dump could crash those specific tokens.
So 3 key points. BTC's defense of 90K, ETH's attack on 3,100, and the risk of the hackers' stolen funds hitting the market. Very clear.
That's the landscape for the next few days.
All right, let's zoom out one last time and put it all together. What is the overall market outlook and forecast?
Let's break it down into short, medium, and long term. In the very short term, the next few days, I expect more of this sideways chop.
The holiday lull continues.
Yes. The market will likely be in a holding pattern, watching those key levels we just discussed, 90K for Bitcoin and 3K for Ethereum. The biggest risk in this period is a sudden long or short squeeze because of the low liquidity. A big order could trigger a cascade.
So a period of high alert, but likely low action. What about the medium term, say, the next few weeks to a couple of months?
The medium-term outlook is, I think, much more positive. The bullish factors are starting to outweigh the bearish ones.
You've got the Fed rate cut expectations at 85%.
That's a massive tailwind. And you have the Nasdaq's move to expand the ETF options. That is a powerful, powerful pipeline for new liquidity and new institutional products to enter the space.
And Ethereum's fundamental improvements could provide a nice balance to Bitcoin's dominance.
I think so. An ETH-led rally supported by real fundamental upgrades could create a much healthier and more balanced market rise than one based on Bitcoin alone.
And finally, the long-term view, 6 months and beyond.
Long-term, the trend continues to look very strong. We're seeing increasing regulatory clarity globally in places like Australia and the UK.
And the big one. Traditional finance is not just dipping their toes in, they're jumping in. JP Morgan is a prime example.
Exactly. Every time a major bank like that enters the space, it strengthens the market's foundation and raises the floor for any future corrections. The long-term upward trend remains very much intact.
So even Cathie Wood's $1.5 million call doesn't sound completely out of the question in that context.
In the long run, the thesis is still valid. The key is managing the short-term uncertainty to be able to participate in that long-term growth.
A perfect summary. So let's just quickly recap the core message for today.
The market is in a really interesting spot. We have a solid rebound underway, driven by Bitcoin reclaiming $90,000 and real excitement around Ethereum's upgrade.
But this is all happening in a vacuum of low trading volume, which makes managing volatility the absolute #1 priority right now.
That's right. The institutional money flowing in is a great sign, but we can't forget how deep and painful the correction over the last month was. It's time for a steady, medium-term perspective, not for getting carried away with the short-term bounce.
Excellent. That's all the news we have prepared for today. We hope this latest trend analysis from the CryptoCore Navigator has been helpful for your investment strategy.
And if you found it valuable, please don't forget to subscribe, like, and set your notifications so you don't miss our daily updates.
Today's analysis was based on information from various media sources, and we want to disclose those now.
The articles cited in today's deep dive include reports from CryptoSlate, published November 28th, titled Why Bitcoin Pumped Today, How U.S. Liquidity Lifted BTC, CoinSpeaker, November 27th, Upbit operator Dunamo announced a major partnership, Cointelegraph, November 27th, Tom Lee cools on $250 Bitcoin call.
Also, Crypto.news, November 28th, Ethereum network raises gas limit to 60 million, Cointelegraph, November 27th, Nasdaq seeks to supersize option limits for BlackRock's Bitcoin ETF, and Crypto Briefing, November 27th, Upbit discloses 37-number hack on Solana network.
And finally, Crypto Daily, November 27th, Kyrgyzstan launches $50 in gold-backed stablecoin. The Defiant, November 28th, Tether CEO slams S&P ratings as propaganda machine. Crypto.news, November 27th, SpaceX moves 11,163 Bitcoin to Coinbase Prime linked wallet. Cointelegraph, November 28th, Bitcoin trades above $90K, market analysis and outlook. And Crypto Potato, November 28th, Ethereum, ETH, set for liftoff. RSI break hints at surge. That's a total of 11 articles.
For more detailed information, please refer to the websites of each respective media outlet. Thanks for tuning in.